Hey guys, hope you are all having a lovely day so far. So it's been a little less than a week since my last AMC video, where I took the time to let all the big news sort of pass by before committing myself to making my longest output ever, thinking I was covering everything. Well, no more than a day later, news came out regarding a fresh lawsuit against AMC by the same party as last time. I want to go over that, give you guys my opinion on it, and then talk about Evergrande, who filed for bankruptcy. A lot of people for some real odd reason have been calling this the end of Evergrande when we are not at that point whatsoever. Though declaring bankruptcy might make you think a company is going out of business, it is not always that, as I will show you. I have not covered the situation for quite a while, since what was being cycled in the news was the same thing over and over. We have been discussing Evergrande since 2021, it's one of my oldest stories ever. I was talking about them before they ever reached national spotlight, and now here we are. So, before we get started, I got some really kind words of appreciation for you guys. That last AMC video I made was controversial in all the ways it could be. The ones that defend Adam Aron and AMC and don't want to hear anything else must have had it with me as much as those that despise AMC and the management and don't want to hear any positive affirmation of the company. It is my most disliked video on the channel, I believe, though I still managed to keep a 95% like ratio. I want to thank two types of groups, but in particular those that disagree with me but keep it jovial. Far too much I see so many other channels obscured in echo-chambered opinions. I know it isn't always easy to keep level-headed when your money is on the line, when my opinions change or challenge assumptions. I received plenty of feedback, mostly positive, and some that had direct criticisms, and I really welcomed it all. I love having those strong and sometimes uncomfortable discussions with individuals, that's the only way we can evolve. I am by no means the largest or most popular YouTube channel out there, but I do hold to heart the fact that I do have the absolute best audience made up of the best critical thinkers and investors in the community. I'm pretty set in my ways, and I really do walk the gray line on most issues. I can love and applaud the success of something or someone while simultaneously arguing against certain aspects of it. I look and critique things individually and objectively, completely dispassionate of everything else, and it does bring me tons of dislikes, but I can't walk any other path. Shout out to all the longtime fans in here and all the newcomers, thank you for the click, the comments and engagement, and for giving a chance to hear me, even if you dislike it. Now, let's talk about good old AMC once again. As per CNBC, the theater giant was hit with a class action lawsuit on behalf of preferred shareholders that are now challenging its stock conversion plans. As you all know by now, AMC got court approval last Friday for a settlement of class action lawsuit by holders of the company's common stock. A holder of APE said in the lawsuit, which was filed late on Monday but reached the public on Tuesday, that APE investors are being shortchanged in the settlement that was approved on Friday. APE investor Michael Simons claims AMC is obligated to provide 3E the same amount of new stock to APE holders as the company is giving to common shareholders of the settlement. Simons went on to complain that the settlement has the effect of diluting the preferred shareholders' ownership interest in AMC, violating the certificate of designation that governs AMC's preferred stock. I think that Simons' claim is actually legitimate, especially if you paid attention into how AMC wants to go about things as I discussed in my previous video. Furthermore, if the courts were to agree with Simons, long-term investors would actually benefit from this as well in theory. I say in theory because who knows what financial institutions might do to the price, but in a perfect market where regulators actually do their job, you would be provided more stock, and given that the majority of holders are retail investors, that can quite literally be even better, especially if the reverse split still takes place after all is done. Personally, I want to look further into the details of this and see how the courts view this argument, but based on the impression I got, it doesn't seem like a bad thing. I have seen on Twitter, now X, how people say this are hedge funds trying to manipulate the courts, but I haven't seen one single piece of evidence tying Simons to Wall Street, so that just seems like a huge made-up cop-out by angry people who just simply are frustrated with the potential delay of things. Simons' argument that this violates the certificate of designation that governs AMC's preferred stock is what is most important in this case, and if he is able to prove in court that this settlement has the effect of diluting the preferred shareholders' ownership interest in AMC, it could give his case legs to convince the court to make AMC change certain aspects of the plan as was detailed. This is very new, we will be following the situation as it develops. The judge requested a stay on the AMC conversion, which means there won't be any conversion until the appeal is heard and a decision by the court is done. This is the main reason why AMC began to rise back up in recent days. The Delaware Supreme Court has set a deadline for responses to a request aiming to halt a stock conversion while an appeal is pending regarding a settlement allowing AMC Entertainment Holdings Inc. to proceed with a plan contested by many retail investors. One of these objecting investors, named Rose Izzo, has filed a motion through her attorneys to prevent the conversion from occurring before the highest court in Delaware can review the appeal. The motion, filed on Wednesday, asserts that if the court rejects the settlement after the conversion takes place, it might be impossible to recover the settlement consideration. Chief Justice Collins Seitz Jr. has signed an order stipulating that responses to Izzo's motion must be submitted by late Friday afternoon. Recently, as we discussed in my previous AMC video, the movie theater chain obtained approval from Delaware's Court of Chancery to convert its preferred equity units into common shares. This decision faced opposition from numerous individual retail investors who were concerned about potential dilution of their shares. Izzo's earlier attempt to halt the conversion pending the appeal was denied by the lower court. In the motion submitted to the state's Supreme Court, Izzo's legal team argued that a stay is in the public interest, considering the many stockholders closely observing the settlement. AMC intends to carry out the conversion by the end of the upcoming week as stated in court documents. I will be covering this as news drop by, so expect more videos coming out on a frequent basis. And now on to Evergrande, the embattled developer that screwed over the real estate of China. Evergrande filed for bankruptcy protecting in an American court as part of one of the world's biggest debt restructuring exercises. As the world has sorta begun to slowly heal, with inflation slowing down in the US and markets becoming more bullish, China has been a key player who has not enjoyed the same kind of success. Their property crisis has continued to worsen and their economy has been weakening. Evergrande filed for protection from creditors in a US bankruptcy court as part of its debt restructuring process, as anxiety grows more and more. Remember, Evergrande is a monumental part of the China, making up roughly about a quarter of their entire economy. This isn't just a corporation with a well-known name, we are talking about 1/4 of China's economy being so embattled that they needed to file for bankruptcy as they can't make good on their duty. Their liquidity crunch has been the biggest hindrance in their ability to stabilize. They are seeking protection under Chapter 15 of the U.S. Bankruptcy Code, which shields non-U.S. companies that are undergoing restructurings from creditors that hope to sue them or tie up assets in the United States. This filing is procedural in nature, but keep in mind that Evergrande still owes more than $300 billion in liabilities. Evergrande's offshore debt restructuring involves a total of $31.7 billion, which include bonds, collaterals, and repurchase obligations. The company will meet with its creditors later this month on its restructuring proposal. The property sector crisis in China has led to a string of Chinese property developers defaulting on their offshore debt obligations since then, leaving unfinished homes, plunging sales and shattering investor confidence in a blow to the world's second-largest economy. This crisis has also fanned contagion risk, which could have a destabilizing impact on an economy already weakened by tepid domestic consumption, faltering factory activity, rising unemployment and weak overseas demand. A significant Chinese asset manager has failed to meet repayment obligations on certain investment products and has issued a warning about a liquidity crisis. Concurrently, Country Garden, the leading private developer in the country, has also indicated a severe cash shortage. All of this is unfolding during a period when property investment, home sales, and new construction have been shrinking for over a year. In the current week, Morgan Stanley joined several prominent global brokerage firms in revising down its growth projection for China this year. The new forecast places China's gross domestic product growth at 4.7%, a reduction from the previous estimate of 5%. China's targeted growth rate for this year is 5%. Yet an increasing number of economists are cautioning that this objective might be unattainable unless Beijing implements robust support measures to counteract the decline. The economic and property challenges in China, along with the absence of concrete stimulus strategies, have sent a wave of apprehension through global markets. Asian shares are on track to experience a 2.8% decline for the week, marking the third consecutive week of losses. Anticipated steps to mitigate these issues include a potential reduction in lending benchmarks set during the monthly fixing scheduled for the upcoming Monday. Many analysts predict a substantial cut to the mortgage reference rate in order to rejuvenate credit demand and bolster the struggling property sector. Responding to the deepening crisis in the property market, the central bank has reiterated its commitment to adjusting and optimizing property policies, as stated in its second quarter monetary policy implementation report published this week. Since the turmoil in the sector's debt landscape began in mid-2021, primarily with Evergrande at the epicenter, approximately 40% of Chinese home sales have seen defaults, with most cases involving private property developers. In an effort to allay investor concerns, Longfor Group, China's second-largest private developer, announced its intent to expedite adjustments to its profit structure on Friday, in response to shifts in supply and demand within the real estate market. Evergrande, in March, unveiled an offshore debt restructuring plan with the expectation that it would facilitate a gradual resumption of operations and the generation of cash flow. Presently, the company is seeking creditor support to successfully complete this process. Additionally, an affiliate of Evergrande, Tianji Holdings, filed for Chapter 15 protection in Manhattan Bankruptcy Court on Thursday. In a filing submitted to the Manhattan Bankruptcy Court, Evergrande disclosed its pursuit of recognition for ongoing restructuring discussions in various jurisdictions, including Hong Kong, the Cayman Islands, and the British Virgin Islands. The company is proposing a Chapter 15 recognition hearing scheduled for September 20th. In a similar vein, in June of the previous year, another Chinese developer, Modern Land, which had defaulted on offshore bonds due in October 2021, filed a petition for Chapter 15 recognition under the Bankruptcy Code in New York. Trading of China Evergrande shares has been halted since March 2022. So as you guys can see, the situation with Evergrande is not over yet, not even close, but it sure riled up everyone. Last video I made went over Hawaii victims and how property investors and developers are trying to reach people in Maui Island to try to buy off their property heavily discounted. Though right now everyone is pretty much enraged with how scummy these business practices are, trying to take advantage of people who have quite literally lost it all. The real determining factor on the success of these companies will be time. Right now people are livid and angry, full of energy, but as time goes by, depending on how well the government and insurance companies are able to help people, we could see the most in need caving in to investors and developers. News came out that Hawaii's governor conceded it would be tough to stop outsiders from buying up land on Maui. I had previously informed you guys that the governor vowed to protect the locals from outside buyers, but already things are taking some turns for the worst. Governor Josh Green are exploring a moratorium on people outside the state trying to buy Lahaina properties, but he says it is a very difficult take. On an interview he said, and I quote, "The governor is not allowed to simply say a resident of Hawaii can buy this house, a resident from California can't buy this house. This is a very tricky legal question, and as much as we'd like to snap our fingers and just do it for local people, it's hard." He also said that rebuilding Lahaina after last week's fire will require breaking through stalemates over new construction and water use that created a housing crisis on Maui in the past. While these things are happening, some 950 survivors have been placed in hotel rooms vacated by tourists while another 500 people have moved into Airbnb rentals, but we know this is a very short-term solution. Rebuilding in the decimated town can't start until federal workers clear the land of the toxins such as asbestos and heavy metals, which could take several months and upwards of $750 million. In a more dire statement, Governor Green said that moving forward after the fire will require the state to have an honest discussion of its future needs, including new construction. About 14,000 Hawaii residents move away each year, he said, driven out by housing costs. Rich people will always be able to find a way to buy a one-off house or a condo, but the normal income citizens won't. It's a really ugly scenario that's taking place, and the fire was merely just the beginning of a huge campaign the rich will push in order to secure most of the land that just 2 weeks ago belonged to the natives of Hawaii. I am not hyperbolic when I make those long morning essays regarding the never-ending hunger of Wall Street and their determination to quite literally take ownership of everything you own. As the old saying goes, you will own nothing and be happy. Thank you for watching this video through its entire conclusion if you are still here. Remember that if you are interested in day trading or taking weekly trades, please give my free Discord a chance. I post plenty of plays there for everyone, so drop on by if you have a chance. Let me know your thoughts down below, and I hope to see you on the next one, To the Moon.